Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within endless pages of corporate announcements. Today we're looking into AEON Biopharma, Incorporated's latest filing, and let's just say they're making some big moves that might remind you of a game of chess. Before we dive in, if you like getting straight to the point on company filings, make sure you subscribe. Also, our Discord community is linked in the description if you want to chat about these plays with other finance enthusiasts. So, AEON Biopharma has just announced some significant agreements. They've entered into a securities purchase agreement with certain investors for a private placement. This basically means they are selling new shares and warrants to raise money. They're also touching base on a term sheet with Daewoong Pharmaceutical Company, Ltd, concerning an exchange of existing convertible notes for new notes, shares and warrants. It sounds complicated, but we're going to break down what it really means for the company and its future. This report is filed under the Securities Exchange Act of 1934, which requires public companies to report significant events. The earliest event reported here is from the 12th of November, 2025. This is the filing with the US Securities and Exchange Commission, or SEC, the folks who keep an eye on the stock market. This specific form is an 8K report. Think of it as a current report that companies file whenever something big happens that investors need to know about right away, like a major deal. This is our company for today, AEON Biopharma Inc. They are based in Irvine, California. Their class of common stock is traded on the nice American exchange under the ticker symbol AEON. AEON Biopharma is identifying itself as an emerging growth company. This status allows them to delay adopting new accounting standards, which can be beneficial for smaller, growing companies. This section is all about the major deals they've made. The first big news is a securities purchase agreement. AEON Biopharma is selling shares of its common stock, along with pre-funded warrants, and what they call true-up warrants, to certain investors in what is called a private placement. This means they're not selling these to the general public on the stock exchange, but directly to a select group of buyers. The price for each share is set at $0.9116, or slightly less if investors choose to buy pre-funded warrants instead. They expect the first part of this deal to close soon, the week of the 17th of November 2025. At this first closing, they plan to issue about 1,964,905 shares or pre-funded warrants. The second part of this private placement is a bit more complex. It hinges on getting approval from their shareholders. This is because the deal involves a larger number of shares, and company rules often require a shareholder vote for such significant dilutions. This second closing is also tied to something called an exchange, with a company called Daewoong, which we'll get to in a moment. At this second closing, they expect to issue an additional 4616924 shares, again, or pre-funded warrants, plus a whole lot of warrants. The true-up warrants are interesting. They are designed to ensure that after a future exchange event, investors maintain a specific ownership percentage. If their percentage drops below what it was before the exchange, these warrants will make up the difference up to a certain limit. It is a way to protect the investor's stake in the company's future valuation after the Daewoong deal. As with any major financial agreement, the securities purchase agreement includes standard promises and guarantees from both AEON Biopharma and the investors. These are basically assurances that both sides are providing accurate information and will fulfill their obligations. Let's unpack these warrants a little. Pre-funded warrants are essentially like buying shares now, but paying a tiny fraction of the price up front, and the rest later when you exercise the warrant. The regular warrants can be exercised for cash at an exercise price of $1.099392 per share, and they'll be good for 5 years after the second closing of this deal. The true-up warrants, as we discussed, also have a very low exercise price and mature when they are fully exercised. This is a crucial detail regarding the warrants. Full ratchet anti-dilution protection means that if AEON Biopharma issues new shares at a price lower than what the warrant holders paid, the exercise price of the warrants will be lowered to match that new lower price. This protects the warrant holders from their investment being devalued by future, cheaper share issuances. However, there is a flaw, meaning the exercise price won't go below $0.30387 per share. There is also a cap on how much stock any single investor can hold if they exercise their warrants. They cannot own more than 9.99% of the company's outstanding common stock immediately after exercising. This is a common provision to prevent any single investor from gaining too much control through warrant exercises. This percentage can be adjusted later, but it is a constraint for now. Following this private placement, AEON Biopharma will also enter into a registration rights agreement. This means they promise to file a registration statement with the SEC to allow the investors to eventually resell the shares they acquired in the private placement on the public market. They have a deadline of 20 days after the second closing to file this statement and will work to get it approved shortly thereafter. Now, let's talk about the deal with Daewoong Pharmaceutical Company Limited, or Daewoong. AEON Biopharma signed a binding term sheet, which is like a preliminary agreement for an exchange. Daewoong holds some of AEON's outstanding senior secured convertible notes. These notes can be converted into stock. The idea is to exchange these old notes for, first, a new senior secured convertible note worth $1.5 million due in 2030. Second, a certain number of shares, which they call exchange shares, based on a calculation involving the current amount due on the old notes minus the new note value, divided by $1. And then multiplied by 1.3, they estimate this to be around 231,03694 shares. And third, warrants to purchase 8 million shares of AEON's common stock. This is a significant number of shares, and the accuracy of this estimate depends on getting shareholder approval for this exchange, which they're targeting for the 15th of January 2026. These Daewoong warrants will have the same terms as the warrants issued in the private placement we discussed earlier. This exchange is also subject to shareholder approval and other closing conditions. This section confirms that the securities sold in both the private placement and as part of the Daewoong exchange are being sold under an exemption from the standard registration requirements of the Securities Act. Essentially, they're relying on Section 4(2) of the Act, which allows for private sales to sophisticated investors who are presumed to be able to protect their own interests and don't need the full protections of a public registration. This means these securities can't be easily resolved in the public market without a proper registration or another exemption. Every filing like this includes a section on forward-looking statements. This is essentially the company putting a disclaimer on future predictions. They're saying that statements about their business strategy, plans, goals, and objectives are based on current expectations and assumptions, and that actual results could differ materially. They mention risks like not being able to close the private placement or the exchange due to not getting shareholder approval or failing to meet other conditions. This act provides some legal protection for companies when they make forward-looking statements, provided they also disclose the risks and uncertainties that could cause actual results to differ. This part is a legal notice stating that this document is for informational purposes only and is not an offer to sell or a solicitation of an offer to buy any securities. It is important to remember that this report itself isn't a sales document. This section is a crucial heads up for shareholders. AEON Biopharma is saying that this communication might be considered a solicitation for getting shareholder approval for the private placement and the Daewoong exchange. They plan to file a proxy statement with the SEC about these approvals. They urge shareholders to read that proxy statement carefully once it is available because it will contain important information about the deals. They also provide instructions on where to find these documents for free on the CC's website. Here, they list who might be considered participants in the solicitation of shareholder votes or approvals for these deals. This typically includes the company's directors, executive officers, and potentially other management or employees. Information about these individuals is usually detailed in other filings. This is where AEON Biopharma lists all the exhibits attached to this report. These are the actual documents for the agreements we've been discussing. This confirms that the registration rights agreement, which we touched on earlier, is part of the filing along with the securities purchase agreement and the term sheet with Daewoong. They've also included the forms of the pre-funded warrants, and true-up warrants. These exhibits are where you'd find the precise legal language and terms of these deals. And finally, the signature section. This is where an authorized representative of the company signs off on the report. In this case, it is Robert Bancroft, the Chief Executive Officer, signing on the 13th of November 2025. Now let's look at the bigger picture. AEON Biopharma is clearly in a capital raising and strategic repositioning phase. The private placement suggests they need funds to fuel their operations or growth, and the $0.91 per S-share price indicates the current market valuation they're working with. The fact that they're offering warrants alongside shares is a common tactic to make the offering more attractive to investors, promising them potential upside if the stock price increases. The Daewoong deal is more strategic. Exchanging old convertible notes for a new note, shares, and warrants could mean a few things. It might be a way to restructure their debt, perhaps getting more favorable terms or clearing the way for future financing. The issuance of nearly 23 million shares and 8 million warrants signals a substantial change in the company's capital structure and potential dilution for existing shareholders. The true up warrants and the specific calculation for the exchange shares suggest a carefully negotiated deal to ensure both AEON and Daewoong feel they're getting fair value. The full ratchet anti-dilution protection on the warrants is a very strong protection for the warrant holders. It means if AEON issues stock at a lower price in the future, the warrant holders will benefit from that lower price. This is a significant concession, and it could make future fundraising rounds tricky if they need to issue shares at a discount. The key risks highlighted are shareholder approval. If shareholders don't approve these transactions, the entire plan could fall apart, leaving AEON Biopharma in a difficult position. This is why they're being so transparent about the upcoming proxy statement. They need their shareholders to understand and vote in favor of these deals. Looking at AEON Biopharma, they are clearly navigating a pivotal moment. They are raising capital and restructuring debt, which are signs of a company actively managing its financial health and future. However, the significant dilution from these transactions is a major factor for existing shareholders to consider. The success of these deals hinges on shareholder support, and the market will be watching closely to see if these strategic moves pay off. That's our quick decoder of AEON Biopharma's latest filing. What are your thoughts on these complex deals and their potential impact? Let us know in the comments below. If you found this breakdown helpful, please give this video a like and subscribe for more corporate insights. And don't forget to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, and we'll see you on the next one.